Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an amazing day today. In today's video, we are going over the short-term correction for Bitcoin, discussing what this means, how this may impact the high time frame charts, and of course, what our next short-term targets are. Will Bitcoin be able to reverse back toward the upside here, or will this downtrend that has developed over the past 12 hours continue into CPI? We're also going to be going over the weekly charts, discussing the 62.09 on the weekly RSI, going back over 10 years, discussing recent historical returns based on this RSI breakout. We'll also be taking a look at the weekly chart itself from a structural perspective, and of course, diving deep into the total cryptocurrency market cap as it is now retesting a major level of support, and the altcoin market as it is retesting a level of resistance. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. That is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us in VIP. To do that, go ahead and click the pinned comment of the free channel. Contact the admin by clicking this name, check out a 52-month trading track record, or check out a 10-minute video showing you inside the VIP. You'll get access to two channels: the main VIP channel where we post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, including access to all of our group chats, our general chat, our trading chart and education chat, our trade setup, daily video help, and community setup chat. Check it all out, guys. We'll love to have you in there, and let's dive into the video. So taking a look at the short-term price action following on from yesterday's video, we described a situation where we had bearish exhaustion developing. We had, of course, this bearish divergence shown on the RSI, signifying that sellers were stepping in here, trying to push the price action down. With that, we saw an uptrend developing on the short term, and we had lower lows on the RSI. This was signifying that although there was a degree of selling occurring, there was also a lot of buying pressure coming into the market here, signifying a degree of absorption. We mentioned in yesterday's video that whether or not the price would go up or down would be completely as a result of which side exhausted first, and we were using two levels to determine whether or not the price was going to fall or rise. For the price to rise toward the upside, we needed to see the RSI break through that downtrend developing. That would have signified that the sellers, the exhaustion developing by the sellers was exhausted, the buyers absorbed the price, and they facilitated a continuation. The alternative, and the scenario which did play out, was that the RSI continued toward the downside, and of course the price action broke into and below this overall short-term uptrend, signifying that the absorption by the buyers was not enough to facilitate the price to sustain at these levels, and the exhaustion from the sellers took over, pushing the price back down to that 50 EMA, completing a classic mean reversion correction. At the moment, the price action has seen a small bounce toward the upside, and we're going to be discussing what this means in terms of the short term and the context of this broader move, and applying that to the macro. Let's start on, of course, the data. 24-hour volume and liquidations. Let's take a look at it. 24-hour volume up 43%, 398 billion, with liquidations at 711 million, up 94%. Taking a look at our coming economic news, we do have our CPI data today. This is going to be in just over 12 hours. By the time you're watching this, it will be in about 11 hours, I assume, by the time you're watching this video, maybe at 11 and a half hours. Of course, the expectations are slightly higher than our previous. So the market is expecting inflation to not come out that amazing, and we could be seeing the price action correct in anticipation for this news, and it could even be priced in already. So it's something to keep in mind. Generally, it is only when we see the result be completely different to what is expected do we see any volatile moves in the market. We generally see a degree of volatility moving into these news events as we have a lot of front running, a lot of bot trading, a lot of algorithm trading, but it's generally only when that actual result is wildly different to what is expected, whether it be bullish or bearish, do we see a significant amount of sustained volatility. Nevertheless, I always put caution to the wind when trading news events. It is sometimes best to let that news event pass, wait to see how the market reacts, and then jump back on in. Of course, we do have PPI data following on the 15th. Again, currently it is expecting a slightly higher result than what we had previous. Previous was negative 0.4, expecting around 0.2, the same kind of result over here with the inflation. Let's move over to the DXY. The DXY again saw a little bit of a move toward the upside here on that weekly. Let's move over here really quickly, and we can see if we jump down to that weekly chart, it has more or less continued up to that target we had. We were looking for a target around that 200 moving average, and we are slowly creeping on up there. Again, this is a classic deviation set up at the bottom, breaking back above the change of character, signifying this was in fact deviation, and we're pushing more close into that mid-range of a channel, the first target of around 102.4. Moving over to the S&P 500, the S&P 500 has reached our first target, again breaking through that $5,700 resistance. We explicitly stated on the channel our first target would be 5,800. Following from 5,800, we are looking at this gap in the VRPV around 5,900 to 5,000, about 6,000. So at the moment we have come up and retested, breaking temporarily through this level. Again, this is a good sign, but we are now at an area of resistance, watching to see how this daily candle behaves, especially moving into CPI. If we see this daily candle break back down, that could signify a failure or a deviation above this local high, and thus a continuation back into support. But if we are able to sustain post CPI above this into the next daily candle close, it is likely the trajectory will continue toward the upside. That is it for the broader markets, guys. Let's go ahead and jump into our main analysis today for Bitcoin. Now, before we do, if you were interested in supporting the content, supporting me, and supporting yourself, sign up to BitGet, BitUnix, or BingX with the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. Check it out. We'll play a quick ad and we'll jump on back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and get back into it. Now, I want to start on the total cryptocurrency market cap chart yet again, because again, this chart is incredibly important when contextualizing the broader scope of what cryptocurrency is and how it is performing. Now, when we're looking at the total cryptocurrency market cap, we are watching our horizontal levels. Specifically, we are watching the level at 3.2 to 3.25 trillion. Simply this lower black line up to that POC level. The reason we're watching this is, again, this was once a major level of horizontal resistance. It acted as a resistance since the 4th of February. Up until the end of Feb. So about a nearly 4 week period, we had a horizontal resistance here, eventually facilitating the breakdown, the retest and continuation into those lows. So what is once a major resistance becomes future support. So what we are seeing here now, guys, is the price action has broken through this region. We have now seen short-term correction back into this level, and we are testing to see if we are going to find this level as an area of support, or if we break down, could lead to larger corrections across the board for both Bitcoin and, of course, the altcoin market. So let's take a look at this and contextualize it. At the moment, provided we are able to sustain above this level as support, the probabilities for both Bitcoin and altcoins are still hedged in the upward direction. So we are expecting more upside. Now, that doesn't necessarily mean we won't see short-term pullbacks like we have just seen for Bitcoin over here. It does not say anything about the short-term direction. We are very likely to still see short-term corrections. Mean reversion is completely healthy. Profit taking is perfectly fine. Open interest reduction is perfectly fine. The issue comes to if we break below this region, and we'll talk about that in 1 second. But it's important to note, just really quickly, just because we are sustaining above this support does not mean permanently and only up. Okay, permanently and only up is a pipe dream. It never happens. The market moves up, it moves slightly down, it absorbs, it reabsorbs, and then it continues toward the upside. So at the moment, what we are seeing here is we are seeing profit taking occurring. We are pushing into a high time frame level of resistance for Bitcoin. Of course, Bitcoin pushing into our weekly high. We are now seeing the total cryptocurrency market cap pull back a little bit as Bitcoin is dropping a little bit, and we are pushing into a high time frame area of support. So the big question is, are we going to sustain this area as support? And if we do, it is likely the overall upward direction will continue. And the thing is, if we don't, we are likely going to see steeper corrections, and we'll be watching for support at this 3 trillion to $3.08 trillion level. So worst case scenario, the total cryptocurrency market cap loses this major support. We correct down to 3 trillion to 3.08 trillion. And with that, we see the broader cryptocurrency market being that of the altcoin market, which we'll discuss in a second, and being that of Bitcoin rejecting from major levels of resistance, okay? And the altcoin market, like we just said, also rejecting from a major level of resistance. So those are worst case scenarios. What are the probabilities of that occurring? Well, as always, support is support until it is not. So while we are sitting above this level of support, the probabilities are not in favor of a correction. If we are looking at something like our momentum as a leading indicator, the RSI has not even broken down yet. So we haven't had a negative momentum shift here on the daily chart for the total market cap, and therefore the probabilities are still in favor of this level holding, but it is more or less being aware of the potential consequences if this level were to break, so you are able to react and act. Nevertheless, and I say this, and I've said this already, this is not the time to be aping into Bitcoin positions. If anything, you'd be watching for very undervalued altcoins, which are breaking out of structural downtrends or having major breakouts that may continue toward the upside. But in fact, this is a level that you want to be looking to take profits on any long positions you took at 89,000 breakout, at 93,000 breakout, or even the retest of the Gaussian channels. It's a good time to take profits because you can always scale back in if the price continues upwards. But fast forward, imagine we go down, you can't go back here and sell, okay? So sometimes it is about taking profits and trading level by level, then holding moon bags when it comes to trading, okay? So that is just my advice. That is what I'm doing. I've taken profits and I'm waiting for those next moves. Let's move over to the altcoin market really quickly. The altcoin market is not looking as good as the total cryptocurrency market cap or Bitcoin already. We are at a major level of high time frame resistance. If you have been following the channel, you would know our target was, of course, upon the breakout of 840 billion, we were looking for a move to 920 to 940 billion. We have seen that perfectly. It ticked the box. We've hit that absolutely perfectly. The next leg up for the altcoin market, right? The next major leg up for the altcoin market will occur upon the breakout of 940, okay? That means while we remain under 940, what we will see is we will likely see some rotation from some altcoins into underperforming altcoins, okay? Meaning if we break through 940, the entirety of the altcoin market will be green. While we remain under 940, it is likely that a select few altcoins will be red, a select few altcoins will be green. There will be money rotating between the two, okay? So when we're looking for that, all guns blazers, free money essentially, next leg up, similar to what we had when we broke out at 840, that is going to occur above 940. Until then, taking profits on altcoins that have run up exponentially larger than the average would probably be a smart idea, something that I'm personally doing. Again, you have to make up your own decisions. I'm not trying to tell you what to do. This is just what I'm doing. And looking for altcoins that may catch a rotation might be a smart idea. But personally, when I'm looking for the next entries for altcoins on the higher time frame for swings, I'm watching that 940 level as a trigger point to then facilitate a continuation upwards. Let's move over to Bitcoin now, starting on the short term. So as we mentioned in the intro, we discussed what were happening here yesterday, and we've seen the breakdown and we saw the correction play out perfectly. At the moment, we have to understand that on a short-term perspective, this is bearish. Okay, we have seen a breakdown of uptrend. We've had buyers try to hold the price action upwards. They have absorbed the selling, but then they failed. Okay, they've failed to absorb the selling. Sellers are now in control of this trend. The selling pressure is control, and the bears are in control of this trend. We have pushed down to the 50 EMA, but these sellers are still in control of this trend. For the buyers to get back in control of this trend, what we would need to see, we would need to see the price action push upwards through this range high. Okay, so we're looking for the price action to push above this local high here on the 4 hour, around about 105,000. If the price action is able to push through 105,000, we are then looking for new all-time highs for Bitcoin. Okay, it is going to be like that, new all-time highs. The reason we say new all-time highs is, again, above 105,000, we are going to be sitting above this weekly high for Bitcoin, and very likely we continue massively toward the upside. But until then, this is a major level of resistance. The sellers have exhausted the buyers here. The trend has broken below our change of characters, our local lows. We are creating lower lows over here as the momentum is falling, and we are pushing ever so slightly into a low historical resistance range. A low historical resistance range is a range, okay, so a range between two price action, okay, on the horizontal scale. Okay, so we're using a visible range volume profile. So on the horizontal scale, representing that at each horizontal increment, okay, essentially the price action in increments would be like each dollar going upwards essentially, or downwards in value between two specific price points. The volume requirements based on historical trading volume is significantly lower between that range than out of the range. What does that tell us? It tells us that if we are able to push into the range like we saw here, we saw that momentarily, right? We would see a volatile, or should I say a dramatic surge in volatility in the direction of the price action of which it broke into the range. So if we're above the range, we're trading above the range, we broke in, we'd see a volatile surge and then we'd push back upwards, or we'd see a volatile surge which continues to the range low. Whereas if we broke upwards into a low historical resistance range, similar to saw here, we will see a volatile move in the upward direction. So all we can say is that we would see a surge in volatility, and the volatility will likely be in the direction of which the price action is continuing. Therefore, this is going to be something of a warning we have to pay attention to, because if we push back in and lose our 50 EMA, the potential target for Bitcoin could be back at 98,000. Again, 98,000 could be a target for Bitcoin. And if that were to happen, it is likely the total cryptocurrency market cap would come back down to at least retest that 3.2 trillion. So that's not going to necessarily be bearish, and that won't be necessarily bearish for Bitcoin either, but I would be concerned if we lose 98,000. That is when I'm going to be concerned, and that is when we could see high time frame corrections, as this is our prior break of structure level, meaning if we break back below that region, this entire area here would essentially be signifying that the price was attempting to sustain, and it failed. There is no demand at these levels. The price will push into lower levels of demand. Okay, so that is how that is going to work. On the short term, I'm going to take a neutral stance here, especially moving into CPI data. From a technical basis, the expectations are going to be lower, okay? Maybe not 98K, but we definitely have the potential to push 98K. And then if I want to turn bullish on the short term again, I need, of course, good CPI data to come out, and I need the price to push above 105,000. That is what I'm looking at on the short term. Let's quickly move over to the macro. So the macro, as we discussed, the weekly candle close is going to be very important. Again, the weekly candle close above the weekly range high will trigger the next move toward the upside. Similar to when we saw the weekly candle close above the range low, we saw a dramatic move upwards. We would expect a dramatic move upwards again if we close the weekly above. Simple as that. When we're looking at bearish triggers on the weekly, The bearish triggers for what would send us into a bear market are very far away. We've got the 50 EMA, we've got the Gaussian channel upper band, and of course, we have got the yellow line here, which is the baseline of the Ichimoku cloud, which is sitting, as you can see, right at 79,000. So the trigger points, okay, the levels of which we'll need to break to enter a macro downtrend are very far away still. So we do have some breathing room here, and we're talking about the macro integrity of the trend. When we're looking at the technicals, we're looking at something like the breakout here on the 62.09 on the RSI. I've showed you over here historically. This is the last 6 years from 2019. We saw a breakout. We saw 143% rally, 12% rally, 464% rally, 27% rally, 11% rally, 113% rally, and 35% rally. Every single time we have broken through that level, we see these large surges. Again, sorry, we are on the 2-week. I'm talking about the weekly chart. So we can see over here, every time we break out on the weekly, we see these large surges, okay? So will we see this happen again? Again, not every indicator is 100% accurate. This is not really an indicator, it's a momentum shift occurring on the RSI, which is the indicator. So nothing is 100% accurate, but based on the last 5 to 6 years of price action, every single time we have broken above 62.09, we have at least seen a 10% rally. Okay, now we have seen some go up much more, but we've at least seen a 10% rally. So will this result in the dramatic next leg upwards? It very well could be hinting towards that, because again, if we do have that push above 105, we will be pushing into new all-time highs, which will be a large move toward the upside, and this RSI over here could be hinting towards that move to occur. So definitely something to consider, not really something we want to be ignoring too much. It is a very strong momentum shift occurring here on the weekly, which very well could push the price to new all-time highs. But what happens in the short term and how this price action develops over here and what impact that will have on the total cryptocurrency market, which will in turn impact the altcoin market, is again going to be up to how the short-term price action develops. So thank you for tuning in. Have a fantastic day. I'll love to see you all in the next one. We'll see you on Thursday. See you then.